Take a moment, look at the disclaimer. This content is for educational, informational, entertainment purposes only, and nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. We're here just to tell you how BTA analyze the markets, how we look at the markets. This is Rod from BTA, and we are known as the Middle Traders. Okay, this is our end of day update for the Major Market Index ETFs for July the 8th, 2022, Friday, July the 8th, 2022. And we're going to start out with the DIA. The DIA, the ETF that tracks the Dow Jones. And as you can see, right now, we made it above the 21-day moving average. We came back and tested the 21-day moving average. Today's low was directly on the 21-day moving average, almost to the penny, and it bounced. More directly on the 5-day moving average, and then it bounced. And we pretty much closed right where we opened at, okay? But if you notice here, today's action, we opened up, we traded down to the 5-day, right below the 21-day, and then it bounced, rallied up and pulled back and closed pretty much where it opened at. Okay, but it's still closed above the 21-day moving average for the second day in a row. Okay, the 5 is above the 9, and the 5 is testing the 21-day moving average. But look at the volume once again. Low volume. The volume is low. What did we say yesterday? A rebound rally on low volume is a form of weakness. It's a form of weakness. Rebound rallies on low volume, new highs on low volume, distribution, breaking the key moving averages, gap down days are all forms of weakness. Okay? That's a form of weakness. Let's look at the structural chart. This is a daily chart of the DIA with our structural chart, with our horizontal support and resistance levels, and our trend lines. And as you can see, we opened up and closed right on this downward trending trend line going across this internal highs. Okay, you see it today. We got above it and we pulled back and closed right to this trend line for the second day in a row, almost to the penny. How many times do y'all have to hear me say almost to the penny? Don't let anyone tell you that these lines don't mean anything. The problem is they don't know how to draw them. Okay? If they knew how to draw them, they would see that price action stopped to these levels almost to the penny. Okay? And once again, for the second day in a row, we closed right on this trend line. So we got to get above this trend line, y'all. It has to happen. Okay, if this rally is going to sustain itself, of course, it got to get above this trend line. All right, that's the next area of interest right here, this downward trending trend line. Well, we held support right here at the 312.53, this horizontal support level, but we also closed and holding resistance at this downward trending trend line. Okay, if we could get above this and bounce off of this and keep rallying, well, maybe the 316.91 is the next level. But it's a lot that has to go on before it gets there. Look, the main thing that we want to keep an eye on right now, is can we hold this 21-day moving average? Okay, can we hold this 21-day moving average, this downward trending yellow line? And what is going to happen? Because we right at this downward trending 50-day moving average. That's a very strong overhead resistance level. We're still right there at the 50-day moving average. Let's take a look at the SPY. Before we go there, listen. See that relative strength index? You see, we got to get above 50. We tested it today and pulled back. It's at 49.31. We got to get above 50. You got to get on the right side of the 50-yard line. There's no ifs, ands, or buts about it. You have to get on the right side of the 50-yard line. And until we get above 60, right here, this green line, well, there's no need to really get that excited, because when you get above 60 is when you see that's when you know that you really got strong momentum to the upside, and the buyers are more in control. So let's look at the SPY, the SPY, the ETF that tracks the Standard & Poor's 500. And the same thing, we came back and we held support. We tested this 21-day moving average and the 5 and the 9, and we stayed above it, and we closed above it for the second day in a row. Okay, so the second day in a row, we closed above the 21-day moving average. This is the problem right here. This downward trending overhead 50-day moving average, you got to watch it. Okay, now the volume was a little higher than yesterday, right? So, but don't say that's a good thing, because it's a down day and the volume is higher than yesterday. Well, when we're seeing down days with higher volume than the previous day, well, that can be a form of distribution, right? Okay, but only reason it's not distribution today because the SPY, the SPY, pretty much closed, pretty much. Let me see. It was almost unchanged, right? Let's see what the SPY closed. The SPY closed 0.08%. Okay, the Standard & Poor's 500. I'm sorry, the Standard & Poor's 500 closed 0.08%. In other words, it closed 0.08%. Okay, so that's pretty much unchanged. So it's no distribution because you need more than 0.2 with higher volume than the previous day in order for it to count as distribution. Okay, so technically it's no distribution there. You need 0.2. You need 0.2%. All right, 0.2%, and with lower prices and higher volume than the previous day in order for it to be counted as distribution. Right today we only closed 0.81%. 0.81%. That does not count as distribution. That's pretty much a flat day. The Dow Jones closed up 0.1%, closed down 0.1%, and the Nasdaq closed up 0.1%. So today was flat. Okay. The main thing we got to watch out for this SPY is this downward trending 50-day moving average. I'm telling you, keep an eye on that for the daily chart. This downward trending 50-day moving average is a problem. Okay, it's a problem. All right, I'm telling you, as my mentor would say, it's a problem. You see this here resistance area? You see this here? This here fractal right here? This is overhead resistance right here. Prices got to get above that. So we got this downward trending trend line, and we got this horizontal resistance level. We got to get above that right there. Okay, and then we'll be coming into this longer term red weekly resistance level right there. Okay, then we'll be coming to that, and at the same time you coming into all of that, you running right up against the 50-day moving average, the red line, which is the red moving average line, which is our 50-day moving average line. But for our structural chart, you got this downward trend line here. You got this horizontal resistance level here at 393.16. If you could get above all of that, then this next overhead, very strong overhead resistance level, it's a weekly level, okay, is at 397.17. It's this red line. That's a long-term weekly resistance level, 397.17. But first you got to get above 393.16 in this downward trending internal trend line. So that's the levels on the structural chart. But the 50-day moving average is the key. All right, that is a very strong overhead resistance level. Now look, the RSI cannot, even for the SPY, is not getting above 50. The RSI is not getting above 50. It's at, it's above 50, but it's stalling at 50. It's at 50.20. It got to move above that. But look at the check in money flow. The check in money flow is still in the red. Okay, it is improving. All right, it's moving closer to the zero line. That I have to admit, but it's still red. It's still in the red. Well, let's see what happened. Let's see what happened next week. I'm telling you that you got to be careful. We're coming upon some really strong overhead resistance level on the daily chart. Be careful. You got a lot of economic news coming out next week. You got the consumer price index. You got the producers price index. And these are gauges of inflation. Okay, coming out next week. You got the earnings season starting next week. Okay, Companies are going to start reporting their earnings. Listen, I would not be surprised if this earnings season is not that great. Okay, and then you got GDP numbers coming out for the second quarter. The first estimate of GDP for the second quarter coming out later on this month. All right, so it's a lot going on this month that could show that inflation is here to stay, and that the country is going into recession. Earnings is coming down. Listen, be careful. Be careful. Watch the chart. It'll tell us. So let's take a look at the Qs. Okay, the Qs tested its 50-day moving average today, and it pulled back. Okay, it tested its 50-day moving average today, and it pulled back. You can see that right here, the red line, this downward trending red line, this downward trending 50-day moving average, the QQQs, the ETF that tracks the NASDAQ 100, traded up to it almost to the penny and stalled. Okay, so can we get above this downward trending 50-day moving average and stay above it, close above it, and stay above it? That's the question. All right, we got above the 5 is above the 9. The white line is above the green. The green line is coming close, okay, to the 21-day moving average. The 9 is coming close to the 21-day. We call that our bronze cross. When the 9-day crosses above the 21-day, that's a very positive momentum signal, right? That's our bronze cross. Well, the 9-day green, the green moving average line is coming very close to the yellow, which is the 21-day moving average line. So right now, price is stuck in between the 50, the downward trending 50-day moving average, and the 21-day moving average right below. That's where price is at. Okay, the 21-day moving average is squeezing price into this downward trending 50-day moving average. Look, this is a strong overhead resistance. If we can't get above that, we break back below the 21-day and the 9-day moving average. You might want to start looking out for some movement to the downside. But for right now, we stalled directly on the 50-day moving average. Let's see if we can get above it. It may move above it, but it has to prove itself. Okay, it has to prove itself. And you see that weekly, long-term weekly resistance level right here, the red line, right? This red horizontal line here is a long-term weekly resistance level right here. Okay. That's at 297.45. 297.45. Okay. So listen, it moved up pretty good. Okay. 4 days ago we was down. We was playing around down here near the 280 level. Right. Right now we at 295. Okay. We got above these downward trending internal trend lines, and now we testing this overhead long-term weekly resistance level. Okay. At 297.45. So let's see what happens. Are we going to get above that, or are we going to get some rejection here and start breaking back down as we getting rejected at the overhead downward trending 50-day moving average we just saw on our moving average chart? But right now, 297.45 for the Qs is where it's at. Can we get above 297.45? Well, the RSI did get above 50. Okay, so we're moving above 50, but we saw that before. We saw that before right here, before it collapsed. So we saw that before. So you don't want to get too excited about that, but at least it's moving above 50. But we got to see it get above 60 before it's really doing anything. All right, the check-in money flow is still red, but I have to admit it's getting closer and closer to the zero line. The histogram bars are starting to decrease and moving closer to the zero line. Let's see if we can turn green. Okay, now we spoke about this the other day. Okay, I believe it was yesterday. We spoke about this just yesterday on the ADX. On the ADX, the green line, which represents the buyers, okay, the green line, which represents the buyers, all right, is above the red, which represents the sellers. You can see it right here. The green line has got above the red, okay, and the red is pointing down. The problem is the ADX line is pointing straight down. It's at 15.55. It's no trend. So the buyers has gotten above the sellers. The green line is crossed above the red line, so that's good. That's positive to the upside. That's bullish, right? Well, that's great. But there is no trend. The yellow ADX line is below 20, below 25, pointing straight down. there is no trend. Well, we can kind of see that, right? Because prices are pretty much moving sideways right now. It's not really surging to the upside. It's moving up. It's creeping up, but it's no trend right now, according to the ADX. Okay, but the sellers have now starting to try to take a little control from the buyers. I mean, the buyers are trying to take a little bit of control from the sellers, but there is no trend. The KST, it did give us a bullish crossover. That's great. All right, but it's still well below. Okay, it's still well below where we want to see it at. All right, now let's look at let's expand this for a second. Let's expand this for a second. Okay, let's expand this for a second. Give me 1 second. Let me see if I can zoom in here. Well, we don't have to zoom in. You see this level here, we still a little below what we want to be, but we do have a bullish crossover for the KST. The stochastic Ben gave us a bullish crossover, and now it's in the overbought region. All right, but doesn't mean anything. It can stay overbought for a long time. See how long it stay overbought here, how long it stay overbought here. So that doesn't mean anything. That what it does tell us is that the QQQ is closing higher and higher within its range over the last 14 days. So that's positive. So the QQQs have some positive things going on. But the main thing is that, look, you're coming up upon this downward trending 50-day moving average, and that's where you stalled at today. You got this long-term weekly overhead resistance level at 297.45. Be careful. There's no need to rush. Let's look at the IWM. Look at the IWM on the moving average chart. You see it? We right at the 50-day moving average again. You see all of these ETFs is right at this downward trending 50-day moving average, which is a very strong overhead resistance level. Okay, we got to look out. This thing could get rejected at the 50-day. It done it here. It done it here. It can do it again. Okay, so it did it here. You got to be careful. This thing could get rejected at the 50-day moving average line with no problem. Be careful. Let's look at the structural chart. That was the IWM on the daily chart for the IWM. Well, here's the IWM structural chart, daily chart. Okay, and the main thing is that you know we got above this 170 level. Okay, we held support around the 168 level. We got back above the 170 level. We broke above these internal trend lines, and now we're going to be testing this one here. Okay, this overhead internal downward trending internal trend line. But before we get there, all right, you got to get above the 50-day moving average. That downward trending 50-day moving average is going to be whatever it is going to be. It could be a problem. It's going to be a very strong area of interest. Look, the checking money flow is still in the red, okay? And the bias, which represents the green line in the ADX, has not crossed above the red. And you see the yellow ADX line is at 19.02. There is no trend, okay? If you look at the ITOT on the daily chart, well, we held support at the 21-day moving average at the 9 and the 5-day moving average. I give it that. But the same thing. We got this overhead, very strong overhead resistance level, the downward trending 50-day. Be careful. This downward trending 50-day moving average can be an issue. This is the daily chart of the ITOT. So you see all of the major index ETFs are finding support. They got above the 9, the 5, and the 9, and the 21-day moving average, and they're trying to hold support. All right, the low of the last couple of days has been on the 21-day moving average. All right, that's great. But now we got to see if we can get above the overhead resistance at the 50-day. Now look, you see this hit this horizontal resistance level at 86.88 right here. This 86.88. We touched it. The high of today touched it almost to the penny. Almost to the penny. Okay? So don't tell me that these lines don't mean anything. The problem is most people don't know how to draw. Now we get the next overhead downward trending internal trend line is right overhead. Okay? So we got to watch this downward trending overhead trend line. Overhead downward trending trend line that's overhead. is our next area of interest if we can get above this 86, 88 horizontal resistance level. But look, at the end of the day, it's the downward trending 50-day moving average on all of the charts for the major index ETFs. The downward trending 50-day moving average. The ITOT check and money flow is still negative. It's increasing a little bit, but it's still well negative. We barely above 50 on the RSI, and you can see right here, okay, that the ADX line is right at 20. Okay, so no real trend, is pointing down, and the red line is still above the green. So the buyers have not taken control. Look, just be careful. If you look at the guppy for the ITOT, look at the guppy for the ITOT. Okay, you can see it with the magenta line of closing prices. The magenta line of closing prices stop right at the longer term overhead, longer term red moving averages. The magenta line of closing prices stop right at the lower level of the red moving averages, longer term red moving averages, and pull back. This is the ITOT, the guppy for the ITOT. Let's look at the DIA, the guppy for the DIA. Look, we're above the faster, shorter term green moving averages, but the longer term red moving averages are pointing straight down. The magenta line of closing prices is below it. You see what happened up here? I keep bringing this up. When the last time we got into the red, overhead, red, longer term moving averages, you see what happened? It got rejected. Let's look at the SPY, okay? Let's look at the SPY. Here's the SPY. You see it? The magenta line of closing prices is above the green, faster moving averages, but we're stalling right at the red. Let's look at the QQQs. The magenta line of closing prices inside the longer term red moving averages. Well, we got to get out of that, okay? Before I get too excited. I mean, you see here, the trend is still down. This trend is still down. Yes, we're above the green faster moving averages. The green faster moving averages has turned up. They're trying to expand a little bit. But what happened the last time we got inside of the longer term red moving averages? You see it right here. It got rejected and fell apart. Well, we right back there again. Let's see what happened, okay? Let's look at the IWM real quick, and you see we still right at the red, longer term red moving averages. So that's it, y'all. It's the downward trending 50-day moving average overhead that we have to watch out for. You see the guppy is caught in between the magenta line of closing prices. It's caught in between, or right at, find the resistance right at the longer term red moving averages, okay? That's just the case right now, all right? And if you look at the Ichimoku cloud, you see for the IWM, we stalling right at almost to the penny, okay? This here magenta line, okay, which is the Kijisen, the longer term moving averages on the Ichimoku chart, and it's flat. What happened the last time we had a flat Kijisen? I told y'all that's not a good look. A flat Kijisen is not a good look. We still got a downward pointing cloud. The cloud is to the downside, and we found resistance right to almost to the penny. The high of today's action was almost to the penny, and then it pulled back at this flat Kijisen. This is the IWM, okay? We got a flat Kijisen. Let's take a look at the DIA. You see that flat Kijisen, that flat magenta line on the DIA? That is a very bearish thing. A flat Kijisen is not good. You don't want to see that red. Let's look at the SPY. Let's see what the SPY look like. All right, here's the SPY. Well, let's go back to the DIA. I'm sorry. You see the DIA is flat? This is a daily chart, Ichimoku cloud for the DIA. See that magenta line is flat? Look at the SPY. That magenta line is flat. You see it? The cloud is still pointing down. Okay, we don't have a bullish TK crossover where the yellow is getting above the magenta. Look at the QQQs, a flat Kijisen, and we coming right up on the down or the cloud that's pointing straight down. The cloud is showing a bearish cloud. Be careful, y'all. I don't know what else I can say. The volume is not really hitting the ball out the park. We got a downward trending 50-day moving average. The momentum indicators is telling us things are starting to look a little better. but we're still not really there yet. You see the guppies are telling us that we're coming upon the longer term red moving averages, and you see the Ichimoku cloud. The cloud is pointing down. We got a flat Kijisen, the flat longer term moving average. Look, I don't know what's gonna happen. I can't tell you what's gonna happen. I can't tell the future. Sometimes it seems like we got a crystal ball in the palm of our hand, but I'm gonna tell you something. All we gotta do is keep monitoring the charts, and it's gonna tell us everything that we read to know. This is not financial advice. You know that. But wouldn't it be wonderful if it was? But it's not. I'll see you in the next video.